Good morning, everyone. My name is Jake, and I am with Trade Confident. Candlestick patterns are essential to trading crypto. Today, I'm going to be looking at the top 3 continuation patterns that you need to know to vastly improve your trading. If you find this video helpful, a like and subscribe would be greatly appreciated. We're working hard to provide daily crypto education and analysis for our traders. With that in mind, let's dive right in. First things first, let's define what a continuation pattern actually is. A continuation pattern, at its simplest, is a pattern that continues the trend that the pattern originally started with. Now, continuation patterns are not guaranteed to continue the pattern on the breakout, but they are vastly more likely to do so than other trading patterns. First, let's talk about flag patterns. A flag pattern occurs when a quick, almost vertical price movement resembling a flagpole consolidates into an opposite trending or sideways channel resembling the actual flag. A bull flag happens when an upward movement consolidates into a downward trending or sideways channel pattern. The opposite is true of a bear flag, which has a downward trending flagpole that consolidates into an upward trending or sideways channel pattern. Either way, flag patterns typically break out within 21 candles of the flag itself starting. Again, because it is a continuation pattern, most likely it will continue in the direction that the flagpole started. The next pattern I'm going to talk about is called a pennant. Pennants operate very similarly to a flag pattern in that it starts with a flagpole that moves into a new trend. The difference is that a pennant, rather than a channel, is going to move into a converging pattern with the support and resistance lines moving in on each other, similar to a triangle. A bull pennant happens when a upward flagpole consolidates into a converging pattern and typically breaks up. A bear pennant is the opposite, with a downward trending flagpole consolidating into a converging pattern and then typically breaking down. Another similarity to flag patterns is that they also break out typically within 21 candles of the start of the pennant itself. Pennants are not to be confused with triangle patterns. Although they look similar, triangle patterns typically last much longer and do not have an expected breakout direction. I will be coming out with a video soon on triangle patterns, so stay tuned for that. The last pattern I'm going to be talking about, and arguably the most common one, is called a rectangle pattern. These patterns are sideways channels with the price movement bouncing neatly between 2 horizontal parallel lines. This pattern typically breaks out within 2 to 3 touches of the direction that it originally started from. Again, this is a continuation pattern, so if the rectangle starts from a move down, it will typically move up, down, and then break out, or it'll bounce one more time and break out for that third touch. The opposite is true of a move up. It'll bounce 2 or 3 times and then break up. Typically, rectangle patterns show a period of relief or accumulation after large market moves. Flag, pennants, and rectangle patterns are easy to recognize and are known to be some of the more reliable patterns in the space. Despite this, patterns are never guaranteed to break out in their expected direction. A continuation pattern only means that it's more likely to continue the trend than it is to reverse. It doesn't mean that it's impossible to reverse. Let me show you a great example of this and what I do to combat it. Right here, starting on May 5th, we see the start of 2 fantastic examples of bear flags. Let me show you what they look like. Right here, again, May 5th is the start of a flagpole, with the flagpole ending around May 12th. Look right here, it's an almost vertical line down. Then you're going to take the bottom of the flagpole, and then you're going to find the support and resistance levels. Right here you see a great example of a bear flag, and it even broke out as a continuation pattern down. Here we did see that the trend exhaustion had some big moves down, and the price versus well money flow was still in the middle with a lot of room left to move down, even though we were at a key support level. Because of this, we saw a big move down. Let's take a look at the opposite end of the spectrum though. Right here, again, almost vertical move down, followed by an upward trending channel. However, this broke out to the top side. Again, as you see here, despite being at a key resistance level, the trend exhaustion had room to move up. And again, right here, the price versus well money flow had room to move up. And because of that, shot up through this resistance level as a breakout pattern. Another way I like to use it is using the Bitcoin metrics from tradeconfident.io. You can access these for free, so if you'd like to try it out, if you see a flag pattern, a pennant pattern, or a rectangle pattern on Bitcoin and you want to check for yourself if it's likely to break out in the direction you think, head over to tradeconfident.io and access the free Bitcoin metrics. Right here at the beginning, you can see right where it broke out, we expected to see a move up. While we typically look for moves to happen within the 80% region, it did still show bullish sentiment despite a large move up. Because of this, the price broke up. You can find links to these indicators and metrics in the link in the description. If you're interested, check it out. And if you have any questions, please feel free to shoot us an email at betradeconfident@gmail.com or leave a comment and we'll get back to you as soon as we can. I really hope these trading patterns help you out, and I'd love to see some examples in your future trades. With that in mind, trade safe, trade confident, and I'll see you in the next video.